of funding winter and the way forward. So we know that the current challenge is the funding winter, and a lot of people here would love to hear the perspectives of great people whom we have on the panel here. Would like to invite Mr. Arpit, who is first one on the names. I know it got close, but I'll just open and read. So Arpit Agarwal, who is partner from Blume Ventures. A warm welcome to you. Please have a seat. Blume Ventures manages 625 millions of assets. He also co-founded Head Start Network, India's largest startup community, which touches more than 100,000 entrepreneurs annually. This is fantastic. Happy to have you here. He was named in the prestigious 40 under 40 in 2020. So, one round of applause for him, guys. Would like to welcome Ashish Kumar, who is the co-founder and general partner of Fundamentum, a Series B plus focused VC. It's one of its kind scale-up platform committed to help build enduring technology companies, starting off from 100 million fund, which is like 227 million was added recently. We're so happy to have you here. Welcome. Followed by Arjun Rao, who's GP at Speciale Invest. He's a founding partner at Speciale Invest, a seed VC fund, which is focused on deep science and tech startups in India, USA, Israel, and manages over 40 portfolio companies and $70 million in assets. It's great numbers, and looking forward to get all your perspectives. Warm welcome here. And followed by Vinay Bansal, who's a co-founder of Inflection Point Ventures and Physical Capital Inflection Point Ventures, which is an early stage angel investing platform. It's having over 7,000 plus angel investors and investments in over 130 plus startups. 200 startups, so it's grown from the time I was given phone to now. So it's 200 plus startups. Physics Capital is a $50 million VC fund by the co-founders of Inflection Point Ventures, one of the greatest, largest CXO-driven angel investment firms in India. Happy to have you here. And the last but not the least, this session is moderated by Vijetha Shastry, an associate director at Standard Chartered Bank, 28 years of handling challenging assignments in the service industry, hospitality, travel, and co-working. He's an avid startup member and mentor many startups, business owners, and CXOs. Super excited. No more in between, you guys. Over to you all.
Thank you so much, ma'am. You did a phenomenal job in introducing each and every one of us. We discovered things about ourselves that we didn't know. So thank you for that. Okay. So ladies and gentlemen in the room, good afternoon. All good? We are doing good? Bangalore is treating you all well? Excellent. So for those very quick questions now, if you don't mind, very quickly. Outside of Bangalore, startup founders. So we were debating this, right? Bangalore, Delhi, Bombay, Jambi. So there are people from outside of Bangalore, right, Arpit? Great. And then the next question is IIT alumni. I'm assuming 90%, but okay. Oh my God, what a stupid question. Okay. Apart from these four wonderful gentlemen or investors, any other investors in the house? So many, right? So for those still looking for funding, apart from them four, you have many other people. Network with them later and don't leave the hall till we finish. After I do what you all want. So can I start, ma'am?
Yes, sir.
Thank you. Thank you so much. So the introductions are done. So let's get into this immediately. So a round table conversation piece is what we want to do. We want to involve them as well. What, if you don't mind, just talk about the sectors and some of these phenomenal founders that you're working with and why you're working with them. Crisp and short. And then what we're going to do, ladies and gentlemen, a few of you, we're going to ask you all to crowdsource some questions or rather some information that you want from these amazing resources. Does that make sense? Because we want you all involved, not a one-way conversation. Good enough? Perfect. So now over to you guys. Arjun?
Hi everyone. My name is Arpit. I work with this firm called Blume Ventures. We have been sector agnostic but early stage focused VC firm. I am based in Bangalore. I've been looking at a lot of deep tech side of the things over the years and have invested in companies which are in robotics, in manufacturing technology, also in circular economy. It's a used car company, a used devices company, and looking at health tech in a deep manner. Took a very deep view at med tech, all kind of IoT, bunch of biotech, different companies. It could be cancer diagnostic, it could be something else. Most recently, we're looking at very deeply into electric vehicle space and broadly into the climate tech space. So anything which touches climate, removes carbon, alleviates carbon. It is something I'm interested in. Recently offered a term sheet to a company in sustainable packaging space. And apart from that, I built a portfolio of a bunch of electric vehicle companies. You may have heard some of them from the media. But yeah, those are sectors which are interesting to me at this point of time. So broadly, climate tech, deep tech, health tech, and logistics, if I look at it.
Thanks, Arpit. My name is Ashish Kumar. I represent Fundamentum. We are a scale-up fund and typically come in after the first round investment has happened. So I really want everyone here to do very well because it is their portfolio that we typically get very interested about. So we usually come in when there are, of course, the initial proof of the product is there. There is some market adoption in the business, and we typically invest around $10 million, $15 million in a company in the starting with a starting check. The areas that we have usually invested in have been many of the industries that Arpit talked about, but little more recently we have looked at a lot more B2B, lot more fintech. Climate, is the larger theme, of course, where, electric, energy, transition, all of that is something that we have looked at. One area that there is a significant personal interest, and I come from a technology world. I was a technologist, then became entrepreneur before I became a venture investor, right? So anybody trying to do something with the new AI tools, Gen AI stack is something which is very, very interesting. We have made a couple of investments in that space yet to be announced. And I think this is where we have finally, India traditionally has been lot more services play, right, for the companies which have sustainably scaled. And I think Gen AI stack gives us an opportunity to create, lot more scalable service companies in India, for the globe, for India, and all of that, right? So pretty much excited about that.
Thank you, Ashish and Arpit. This is Vinay. I run Inflection Point Ventures as an early stage, and Physis Capital, which is a little bit later stage, Series A, Series B. Early stage, about 200 portfolio companies. Good thing about us is we can look at idea stage, we can look at a POC stage, and we can look at scale-up stage as well. And therefore, we are sector agnostic, stage agnostic. Practically, we've had successes across all sectors. Whether it is, let's say, electric vehicle is Blue Smart in a portfolio, you would have had, since you're in Bangalore, many of you used maybe Milk Basket, right? So that has been our portfolio today, OTP. Other than that, Torch, and many others. Recently, we've done 4 deals in drone space, and I think one of them is an IT Metros founder as well. And we continue to stay very, I would say, interested in healthcare, deep tech like drones. We're starting to look at space. We've done a lot of retail in the past, and anything to do with circular economy, it remains of high interest to us.
Yeah, lovely. This is Arjun here, representing Speciale Invest. We're a pre-seed, seed-focused venture capital firm investing in what we call deep technology ideas. It can mean many things to many people. Our simple way of focusing on deep tech is 50% enterprise infrastructure software. So AI, machine learning, cloud infrastructure, data infrastructure, security, privacy, dev tools is something that is super exciting to us, built from India mainly for the global markets. The other half of the portfolio is frontier tech, usually at the intersection of hardware, engineering, sciences, and software. Many areas within that. We've been early investors in space technology, have made 5 investments in space tech, including rocket launch companies like Agnikul, Earth observation satellite companies, satellite communication. Now also invested in a company that is building the future of manufacturing in space. We have also done a fair bit in the climate sector, starting with EV, both ground mobility as well as aerial mobility, and done things on the recycling of batteries side. Recently invested in a battery cell company, so fundamental infrastructure there. Variety of other areas now that we are starting to focus a little more on semiconductors. We spoke about Gen AI and all the applications that needs amazing chips, right? And given the global geopolitical scenario and need to reduce dependence on China, I think there's an interesting opportunity for India. So semiconductors is an exciting space. We've recently put out an offer to one company. right, with a differentiated IP. We are also now spending time and starting to invest in biotechnology. Again, usually, sort of intersection between AI and biotechnology and data, right, which is very exciting. So some of these areas, super excited to be here for this conversation.
Thank you so much, gentlemen. So now just coming to this topic of funding winter in way forward. So usually whenever a panelist happens, we'll have a pre-panel discussion. So a lot of them very clearly said that yes, it is slightly tougher to get funding, but spring and summer is on the way. Don't worry. So first is don't worry. Life is not too bad. Okay. So they're all here. There are many other investors. Go after them. So what we'll do now is, again with the permission of the panelists, just a quick crowdsourcing of what would they like to understand or get to know more. Don't ask questions that you can find on Google or on their website. Those will be discounted. Sandeep, yeah, please just shout it out, buddy. I'm not sure if I can get your mic or take my mic.
Yeah, one question to both Arjun or maybe Arpit also on the space tech, right? So what are your thoughts and how do you build conviction? Because it's just so, J-curve is really, not so visible, right? For most of the people who invested in a typical startups. So your thoughts on that, only in space tech.
Thank you. Anyone else? Just raise your hands, ask for a mic, at least 4-5 questions, but as quickly as we can.
No questions for VCs? Seriously?
No, there are some.
Hi, I am Sangarsh. So I've been on the startup side working with many of them, founding some of them my own. So we just think about different cycles of VC funding. There was a time when there was a frenzy. Right now there is winter and possibly there will be again a spring. How do you think about that? Okay, this is we should invest this much. Are we like burning so much? Are we asking startups to burn so much? Now we are asking them to become profitable. So what's your thought process? What's your mindset around this?
I can't think of a better name for an entrepreneur than Sangarsh.
Sangarsh karo, sir. Yeah? Fight it out. Any other questions? Ladies and gentlemen, now is the time, because remember at some point of time I'll have to say there is no time left now. Thank you very much. So don't let that happen. Sir, one more gentleman at the back. Yeah, please.
Hello. So as the funding winter will fade, hopefully, I believe that VCs will be very conservative in what kind of startups they fund. And I also think that many of the startups which are probably just aping the developed nations in terms of the ideas, they may not get funding because in terms of conservativeness, I think that VCs will fund problems which are very native to India or very relevant to our own context. So what are the top problems that VCs think for the Indian context are relevant and will be higher up in order in terms of funding?
Okay.
This question is actually to Arpit. So I'm from the EV space. And I remember you saying that investors typically look at the least resistance, the path of, how does that fit in deep tech? Because the gestation period is long. And what is that thought process there?
Arpit, you remember this question? Sure. Okay.
I did not prompt. I promise I did not prompt him.
Yeah, hi, my name is Hamsavardhan. I'm a founder of a technology that that needs a manufacturing facility, and I'm feeling a lot of pushback from all type of investors who are saying you solve that first and then come back. I'm not unable to outsource it, but why is there such a hesitance towards manufacturing? Because we'd all be sitting on trees and inside caves if we didn't have manufacturing. So why this fear? Thank you.
Wow. Okay.
Maybe one last question.
Okay,
maybe that's it.
There's a gentleman here.
This is a specific question to first to Arpit and then to Vinay. Arpit, what was the motivation behind basically taking on thought leadership? I see Blume does a lot of thought leadership. So regarding that, and to Vinay, on how did Inflection Point grew from a community of angels to a full-fledged powerhouse that it is today?
I would like to thank
Last question. Okay.
get questions in.
This is the last question, final question, okay?
Please.
Hi, I'm Vilas Deshpande from Wave Mobility. Question about space tech. How do you explain PMF and fund returns to your LPs with space tech?
Okay, got it. Fantastic. So, gentlemen, we are sorted to a large extent. But what we had said we would also share with the phenomenal folks out here was about the funding winter moving towards it. It's all about the investors needing to get the returns, find the best of the best founders. That's what everyone wants. So, please, again, it's over to you, gentlemen. Take it as a conversation. You can take it in turns. I leave it to you all. Whichever way works.
So funding winter is here. It is very much here. A lot of so there are two things. Please put in context. This very quickly running through this. A lot of our Series C, Series D, Series E kind of funding has happened by American investors. And those American investors obviously have options to invest into multiple companies in their home market. Now, those companies, if they're delivering some kind of return, obviously the money will flow to those companies. And if the companies have stopped delivering the return, they will flow to other markets like India. Now, they always also have a capital allocation problem. So, as you know, there was a zero interest rate policy by Fed for about 13 years. And only when the policy got over, suddenly everyone's found that you can invest into other asset classes also. As a consequence, the money has gone away from American stock market and also broadly American private market, including also emerging market private markets. As a consequence, since late stage funding has become harder, you see that companies are basically finding it hard to raise money. What has also happened in India, however, is that 2 years back, and this is completely unrelated, it could be, maybe they're related, I don't understand, but it feels unrelated, that a lot of Indian companies, internet companies, Zomato, Paytm, Nykaa, etc., have gone to IPO. And the feedback from the market has not been all positive for most companies. As a consequence, there's a recalibration of what we expect our companies to do. And hence, there is a lot more focus on those things that will eventually matter, because we know that all of us have to generate exit at some point of time. So what makes an IPO work is another feedback that we have received. So what you see broadly, very, very broadly in Indian context is a consequence of these two parallel, somewhat independent trends.
Thank you, Arpit.
I invest in Series B. I'll counter exactly what Arpit actually talked about here, right? So I think the funding winter, spring, summer, I almost look at this as a cost curve, right? So it is not a sine curve because as industry, we haven't not returned too much of capital. So it never goes into negative. But so it'll go up, it'll come down a little bit, and then it'll go back up again, right? So this funding winter is actually a design, not a bug, right? So that's one thing that I think everyone should kind of think about, right? So it will happen every 5 years, 7 years, 10 years, right? The time horizon could kind of reset a little bit here and there, right? But just to kind of give you some data from, so India, again, like what Arpit was talking about, like late stage, like $50-100 million checks typically have been written by the Western guys, right? And these guys, of course, have too many options, other options, so on and so forth, right? Early stage guy, like funds and like what Vinay is talking about, 200 companies that he has invested in, so on and so forth. So clearly there is no funding winter there, right? And I can tell you that, at Series B level, last 3 months, we have written more checks than what we have written in the last 12 months, as an example, right? So there is some data, and I know of some of my other, funds who kind of we collaborate and compete with, they have also done the same thing. So I think this entire funding winter is kind of maybe a thing of the past, right? What has truly happened though is that if you think about every time the winter sets and the summer or the spring comes back, it does not necessarily come back in the same sector. So let's say if you look at e-commerce as an example, or platform businesses, marketplaces, these guys actually got a lot of money because, in India, there wasn't too many digital distribution companies until Zomatos and the Paytms of the world that came in, right? And after that, what will start happening is that there are different set of companies that will start getting created. There will be B2B, there will be fintech, there will be electric vehicles, there will be deep tech, there will be AI-based companies, and so on and so forth, right? So when you are thinking about creating any company, always think about that, what is the why now for this sector? And if you figure out that there is a particular technology, there's a particular trend that makes sense today, and if you are creating a company there will never be a funding winter. If you look at generative AI as an example, the technology in the US, right, and the same thing is starting to happen in India as well, is that last 12-18 months have been probably the best time for them, even better than 2021, right? There is a company called Sarvam that you probably may have read about. They have raised some $41 million, effectively as a seed, right? And I'm saying that some of those are exceptions, but many of those trends will start to happen, right? So we are investing in companies, which are taking advantage of the current trends and the current technologies. So that's one, I think I just wanted to give a sense of the funding winter there, right? Now, the second point, I think there were a lot of questions around, manufacturing and, typically industries which require little more capex, right? And that's honestly a question that we in the industry also ask ourselves. If you think about what has happened in the country last maybe 20 years or so, right? Financial services as a sector, IT services as a sector has done very well in the last 20 years, 25 years. Then I would say consumer, not necessarily consumer tech, right, has also done very well, and what would happen is that looks like this is the time that manufacturing would do very, very well, right? As maybe the people on this stage may not necessarily be the best guys, that does not mean that there aren't investors out there, right? So one, as a group that we have to figure out how to do that. And the reason why we are typically not able to invest in capex heavy industries, because the time the money goes into capex and by the time the revenue uplift come, it is a slightly larger, longer time horizon. And and most of our funds are usually 10-year fund, which means that when we are investing in, we are looking at exits maybe 6-year, 7-year, 8-year time frame, right? Mostly. And many of them does not fit into those timelines. But I'm sure that finance as a trade, as an industry would evolve. There will be alternate sources of money, and at this point of time, I can tell you that there is significant money available in manufacturing. I was actually last weekend I was with a group who was they started a manufacturing business around 5 years, 6 years back. They were doing close to 100 crores of revenue with an order pipeline of 300 crores. And all the investment capex that they needed was around 70 odd crores, right? And I was kind of scratching my head, how do I get in this company, right? So there are things like happening. So I, personally very excited about how to figure out a way to kind of participate in those opportunities.
Thank you so much.
I'll add a couple of things to what first Ashish said and then get into answering the question. Manufacturing, and since I come from a manufacturing background, I spent 5 years with Unilever and 10 years with GE, right, before coming into investing. But I can tell you today, where people want to manufacture is on the moon, right? Why? There's a huge reason about it, right? You want to manufacture all of your rockets on the moon because the gravitational force on the moon is very less. The cost of launching a vehicle from moon is far cheaper than from here. You want to manufacture in the moon because you don't want pollution on Earth, right? And that's why you will see you want vehicles to moon and back that are very, very, very efficient, very, very cost effective. And that's where Tesla, SpaceX, etc. are focusing sharply on making sure that our cost to get to moon and to back is very, very effective and very, very, very cost effective. So the question somebody asked here, right, saying on the space tech, if that excites you, that all of your dirty stuff gets on the moon, all of your manufacturing stuff is happening on the moon because life doesn't exist anywhere else other than Earth, right? That should excite you enough, and that should excite LPs enough to put money behind manufacturing on moon, and it's hugely beneficial. Our space station should be on moon. It rotates around the Earth without any energy. It's a satellite of Earth. Why not, right? So that's the stuff we should be thinking about when we think manufacturing, when we think moon, and why we are doing there, why space tech, etc. I'll let experts answer more, but that's kind of the first point I want to take from Ashish. On the funding winter, I would say it's pockets. You can call India as poor, but India is not poor. There are pockets of rich, super rich, and then there are pockets of poor. And I think that's what both Ashish and Arpit spoke about. Series C and D onwards, once you touch $100 million valuations and above, yes, it's largely the American money. But before that, there's a huge amount of opportunity. We fund 5 to 6 companies a month, right? We have a portfolio of 200. Only 8 have failed so far, right? Which is a mortality rate of only 5%. Right, even on such a large portfolio. Our average IRRs are around 48% IRR is what we operate at, right? That's what early stage should operate at, right? Now, this IRRs are not available to anybody else anywhere else in the domain. So I came from a TPG, a private equity fund, to an early stage fund, right? Because I saw something very different happening here. So at an early stage, if many of you are entrepreneurs, which we just saw with the raise of hands, and you're early stage entrepreneurs, there is no funding winter whatsoever. If you're doing great, if you're solving a big problem, if you're adding value to somebody, and if you can, make something worthwhile, you don't have to always burn money. I mean, services are a great way to make money. Do SaaS, make great money. Why do you even need to raise foreign money? Naukri, Sanjeev Bichchandani never raised after Series A, Series B. He just went IPO, right? That is absolutely possible, right? So we don't even have to always think Series D hoga ke nahi hoga. Arey IPO jao na uske pehle, right? Build a strong company, right? So these are my two perspectives, and I think that hopefully covers. I think one more question that was there I'll cover for you as well is, how has IPV grown? I'll tell you, we never were built for growth. We were built to solve problems that were our own, right? We were solving our own investing problems. Friends came along, they started investing with us. They got 80% IRRs, 80x returns. They brought their friends, and that's how the growth happened. The word of mouth and the product-led growth is what we did, and that's what we do. We don't have any other way to grow, right? So till the time we continue to deliver great returns, do good job, find great founders, and invest right and exit right, I think that's been our core of growth. Yeah.
No, I think a lot of points covered. I'll probably on the topic of capital availability, right? Of course, at the early stage, I do concur with everybody saying we don't, the right ideas get it. There's enough capital for seed, pre-seed, and maybe just right after that. Scale up means you have to have proven something, and then you deserve and get larger rounds, and therefore maybe that filter and that evaluation may have gone up compared to a few years ago because money was easier. The good thing about the lack of capital availability or lesser availability is, I think like we were saying, Sangharsh is at the heart of building a startup, right? And, you're going to build a company for 10 years, 15 years to make it lasting and value creation. There'll be the odd cases where you'll, get a good exit in 5 years. Otherwise, it takes 10 years minimum to build a company. In that, if there's 2 years of a downturn or something, should not matter. Most importantly, the 2 years probably, which the time we are in right now, should teach us and force us to be even more innovative, even more focused on frugality and efficiency, which actually is at the heart of, how new ideas come up, because there are constraints and that like people to come up with solutions, and therefore new ideas come up, right? So that way it's a very interesting and a good opportunity for entrepreneurs and for everybody to understand that we can do more with less, right? I think when I spoke about SaaS companies becoming profitable earlier, etc., the whole world went after SaaS, including all of us, because they're supposed to have 80%, 90% gross margins. And 80%, 90% gross margins and people losing hundreds of millions of dollars. How do the two correlate? We don't know. But that's exactly what happened over the last 5 to 10 years. So we got to reset and recalibrate and say, this is 80% gross margin. Of course, typically, VCs fund for IP, right, innovation, or customer acquisition, right? So now one has to start thinking deeper about better IP creation, as well as more frugal ways of acquiring customers. So I think those are the fundamental things. Maybe just to add on the manufacturing aspect, if the manufacturing can be brought on as a correlation and an addition to the IP, the manufacturing process itself has something unique and breakthrough, and therefore the cost structures are different, then I think VCs would jump at even investing in manufacturing that capex, because we are known to invest in either IP or customer acquisition, these two buckets. You got to figure out where your manufacturing capex fits into, right? So that's what I'd say. Maybe I'll pick up on the space tech one if that's okay. A couple of people had asked that question. Right, 100% agree with what Vinay was saying in terms of what's exciting there. Right. On the lighter note, it's an easy one to say, just look at Elon Musk, right? And say, just look, if that is possible, then, there's a big future. This can't all be, fluff, right? So use that as a starting point. The second question to ask is, does India have an advantage? Right? At least for all of us sitting here, that is super critical in any cutting edge area that we have to invest in, right? The $41 million in Sarvam is about an LLM for India. Right? And that is unique, and that is why the $41 million. Otherwise, it's not going to get it. Right? Typically, if you just build yet another LLM, those hundreds of millions or billions have already gone. Right? So one has to see what is India's edge. And in space tech, our heritage and history of ISRO is just phenomenal. Right? It's just now about privatization and then bringing in all the talent pool that is there. Right? Pretty much and this is a Pan-IIT event, so I can say that the IITs have phenomenal aerospace, programs, labs and professors, and therefore talent pool, right? The ISRO pedigree and background of why we know how to solve some of these problems, right? And then can we add newer manufacturing innovation, newer software innovations, newer engineering efficiency innovations on top to build better rockets, to build better satellites, faster, cheaper, better. That's what makes the opportunity amazing. In addition, what has happened in the last 10 years is about satellites have become cheaper, smaller, easier to build. And basically, they do two primary things: do communication or do Earth observation. And the magic of can we cover and visualize the Earth, every part of the Earth all day long for 24/7? And we are so far away from that. That is the opportunity, right? Arpit has a portfolio company that is trying to do that. We have a portfolio company and a few others are there out there, right? And Earth observation is a phenomenal. There are industry agnostic use cases. There are plethora of use cases. Hedge funds use them, retail uses them, manufacturing uses them, supply chain uses them. Like everybody can use really amazing Earth imagery, right? And then if you want to put those satellites out there, then you need launch vehicles. Then if there are more satellites out there, then you need traffic management systems. It's just an ecosystem, right? And the value creation is just very, I don't know the exact numbers, but it is in the tunes of trillions, right? If you look at the full stack. And with that excitement, I think it should be easy for us to get excited as VCs, as GPs, and definitely translate that to LPs. Sorry, a little long-winded, but I took a shot at that.
I've got my warning signal that I've got precisely 5 minutes left. When I say I means we, the panel, but we should do this, right? We should give maximum value back to these wonderful people here. So very quickly, we were talking about deep tech, EV, space tech. Who's there in IoT, hardware, startups? My God. Seven guys. Anyone? Okay, put your hands on. EV, anyone specifically on EV? Okay, space tech, anyone? Drones, space tech? Nobody. Gen AI? Or whatever you call it, LLMs, okay, 1, 2, 3, 4, fine. So I'm just, why I asked this question was, if you, each one of you have to give specific, crisp, remember, 4 minutes left, I took out 35 seconds, to make them fundable, coachable at whatever stage, early stage, or, Series A, Series B, what are the things that you would look at during these hundreds of conversations that you have, which made you realize that these guys really know their stuff? Makes sense? A nice question, nice answer that you want to give to the folks here. So whichever round you'll want to get.
Yeah, I think quickly for us, we come in at typically pre-revenue, in a lot of cases even pre-product. So we're basically dealing with a team, right? Which I would say easily takes up 50% of the, decision making, the why, right? So what is, and particularly in deep tech, it might be true, is why is this team best equipped to solve this particular problem? Which is, what is the background from where they're coming in? Where have they found that unique technical insight and market insight? It could come from academia, it could come from work in the industry, it could come from source, but that depth, that fit, which I think our parlance is fit, right, is super critical to us. So we're spending majority amount of time trying to find why this team, and then I think Vinay also mentioned why now, right? Is the technology trend at the right place for this team to go after it and to build something meaningful and then create value over the next 5+ years, right? So for us, team is really at the heart. So we're really spending time as much to understand why they're doing this at this point in time.
So I'll add a few more things on the team. I think team is very critical for us at the early stage. Problem technical is easier. And maybe if you guys want to write it down, because this is how we actually do a technically evaluation. Can you work hard? Execution. Can you think critically? An ability to think right, join the dots, challenge assumptions, right? Can you build a team? Will people love to work with you and people will die to work for you? Can you put the team together? Number 4, can you network? Can you work with the investors? Can you work with customers? Can you work with vendors? Can you work with your own employees? Can you work with the guy on the road? Can you work with your peon? Can you work with the board? Can you work with governments? If you have that ability to work with multiple stakeholders and understand those stakeholders, you have it in you to become a great entrepreneur. Arjun already talked about technical capability, right? If you're building a space rocket, you better be a space scientist, right? If you're building a medical infrastructure, you better understand medical very well. If you're building an Oyo hotels, you better have lived in Oyo hotels or the wrong hotels or the smaller hotels, to understand what's the pain point, right? So a technical depth is required, right? And then far more important is, where is your heart? Why are you actually doing it? What was that pain point? What happened to your kid, or what happened to your friend? What happened to your brother? What happened to you? What you went through? What is your personal pain that you actually are driven by when you will not have money, when you have to work 24 hours a day, when your people are not with you, investors are not giving you money? Why will you burn that midnight oil to do that still, right? So these 5 or 6 things, if you're very clear about, I think then we found the right entrepreneur or the right person to run a company, right? Somebody asked us, why did you grow IPV and how did they grow? Because it was our personal pain, right? And we've started working on it. It became a pain of many other people, right? So I'll just stop there as a few things that we look at from an entrepreneur standpoint.
Yeah, maybe before I answer that question, there is something that Vinay had answered in the last question. I can't stop myself from kind of telling that. When he was talking about manufacturing in the moon, I was kind of thinking to myself, maybe the moment we start polluting moon, we'll actually figure out that there's life on the moon as well. Somebody will wake up. Kya kar rahe ho yaar, coming back to this, I think I'll make it very simple, right? I think the criteria for all of us, irrespective of whichever stage, and I can tell you this for even public markets, I've done public market investment as well. It is exactly the same. It is just that you go a lot more deeper down into certain areas, because at let's say when we come in, which is not necessarily the first check, but let's say the second check, we have more data, so we will value that data a little bit more rather than our own intuition, as an example, right? So what we have done is, as investors, we are usually very boring people. We like to be boring people. It's always good to be boring people, right? That kind of ensures that there should not be too much of adventurism there, right? So we have created something called what we call internally a P6 framework, right? So, effectively, the first P is value proposition. Is the value proposition whatever you're offering significantly better than the next best one or not, right? In the venture parlance, they call it 10x. The second one is profit pool, which basically means that what is the market size multiplied by the gross margin profile. So in the same industry, you could have different business models which will have different gross margin profiles, right? So SaaS has 80% gross margin, so services has a 40% gross margin, as an example, right? So, the profit pool changes depending on what you're trying to do. Third is people, of course, right? And then, of course, all of what Vinay said, Arjun said, effectively, can you hire people? Do you understand the market? Is there a reason that why you would win, right? Why should I not be starting that business? Why should you be starting that business, right? Effectively, what is the insight that you have, which is very different from, let's say the people in the room that you're talking to, right? In general, if the VC in the room knows more about you in that industry, the bad news for you, right? So we as people like to be told that I know more than you, right? Because that's basically that's how our confidence kind of grows. That okay, even though we think that we are smart people and figured out enough number of things, but like you tell us something more, it actually gives us a little more confidence. Very quickly, last P, potential, which is that you may have created something, but that has not translated into revenue today, but it may translate into revenue, let's say 2 years down the line, so on and so forth. Performance, whatever you have done in the last, let's say 12, 18, 24, 36 months, right? And last is price, right? I mean, after all of this, are you the only one who will make money, or will we also make money, right? So that's the last thing that we think about.
We don't have time, I guess, so let me just read from... There's a very famous poem, I'm sure all of you heard about this. If you can talk with the crowds and keep your virtue, or walk with the kings, not lose your common touch. If neither foe or loving friends can hurt you, if all men count with you, but none too much. If you can fill the unforgiving minute with 60 seconds worth of distance run, yours is the earth and everything that's in it. And which is more, you'll be mad, my son. So that's exactly what entrepreneurship is about. There is nothing more to it than to just be at it and don't die.
Can we raise a round of applause for these wonderful resources? Thank you so much, gentlemen.